Hi, I'm Scott Lucas with Wisdom Tax Group and Lucas Financial Services. And I'd like to thank you for joining me today on this session on preparing for tax season. I think you'll find it very useful and probably some information that you haven't heard before. No, nobody's happy about the tax preparation season, and for some of us it's very costly. So we want to do our best to make it an easier experience and maybe even get some more effective tax planning and tax deductions as part of the equation. So a lot of people don't really, I've never probably even been coached on the proper preparation for tax season. So I'd like to share some of that in detail. And by the way, this is just a very simplified presentation that I put together, but I think you'll find it very informational. So one thing is properly organizing your files. And it's something that some people don't give much thought to, but it makes a difference. And one thing is that sloppy files can cost you money. So depending on where you're getting your taxes done, in some cases it can be touched by a number of different people, in an office. And having a nice, neat, clean file can go a long way. It can also help on the accuracy in addition to the cost. So let me show you a picture of two different files that we had. So I'm bringing this in from another screen here. Got two different files here. When I say they're two different files, it's actually the same file prepared properly. This is the file as it came into our office, and this is really how it should have been delivered. So one of the biggest struggles I find that people have is that they have this impression that they have to prove to the CPA or to the tax preparer that if they had $7,522 in medical bills, they are under the impression that they have to prove that to the tax preparer, and that's simply not the case. I want to repeat this. It's not the case. CPAs, enrolled agents, are not auditors for the IRS. That's not what they do. So if you have all of those receipts, those are for you to keep in the event that you're audited and you have to prove those expenses to the IRS. You do not have to prove those expenses to the tax preparer. They would much rather see what your total was. And if you use I don't know, something like Quicken or some other type of software to keep track of your expenses, all they really have to know is what the total amount was. Now, if you have an item or an expense and you're not sure whether it's deductible, that's a different thing, and you would want to keep that separate and identify it and maybe make a note, say, is this a deductible expense? Now that makes sense, but having a whole bunch of medical receipts or a whole bunch of, another one we get is receipts for charitable deductions is not necessary and creates a lot of clutter. The tax preparer would much rather have a total number. How much did you give to charity? How much did you have in medical expenses, what those are? Because if there's a handful of them, they'll probably go ahead and add that up for you. If you have a thick file like this, you are probably going to be paying extra expenses because now they're doing accounting. That's not tax prep. If they're needing to add up a whole bunch of your bills and receipts and things like that, that's not tax preparation, that's accounting. And some people, many times you can be paying a lot more money for that. It's not something that they prefer to do or want to do, but if it is too excessive, you're probably going to get surcharged for it. Also imagine it's the end of the day, you've been working on taxes all day, got a couple of files left on your desk, you got two of them less on your desk and you only got time to do one. Which one are you going to do? Probably this one, right? So anyway, please understand that just throwing everything in that file does not necessarily help you. So it can also cause accuracy issues. So again, looking at that same file, if they've got to add up 42 medical receipts or charitable contributions, and they're in a hurry because they got to get through 25 files that day. The chance that they miss something or misadd something or whatever is there. But before you take it in, if you take the time, add those numbers up, provide that number to the tax preparer, you're probably going to have a lot better accuracy and you're going to save yourself money. So again, I can't emphasize that enough, but it's a big misconception is that you have to prove certain expenses to the tax preparer, and you do not. You only need those for your own validation in the event that you're audited. Secondly, don't leave your documents in envelopes. See that all the time, got a whole bunch of envelopes in there. Well, now they got to go through and they got to open all the envelopes and straighten things out, flatten them out, because many firms, which is what we do, we scan everything. We scan everything into one file. So it just takes longer time to process your file if you leave a lot of things in envelopes. So better experience if you don't. Also stapling together. Some people staple their stuff, and that's also something that I would discourage you from doing. Again, because in many cases, more and more firms are going to scan their digital documents all together. And if they're doing so, then it just takes some extra time to try to unstaple those so that they can actually feed it through a scanner. So some very important tips on, preparation of your file. Next thing is what they call the intake form or the tax organizer. This is an item that, any good CPA firm will request that you fill out the first time that you work with them. Helps give them all the information to set up the file, but also asks a lot of questions that probably aren't going to apply to you, but they don't know that ahead of time. So that intake form asks you a lot of questions to make sure that you're not overlooking anything. The tax organizer is something that you would generally receive the second year after you've worked with a tax preparer. And while it can take some time to go through it, it's really time well spent. Let me share with you why. So let me show you the one that we use. And you can see that the initial portion of it is basic information that is really just needed to get you set up in the tax preparation software system that is used, information with dependents and things like that. But then these are all other pertinent items that are important to ask. We don't want to assume that just because you drop off of a file with a bunch of documents, unfortunately, it's you're kind of doing the person as a service if you assume that there's nothing else. If you take the time to go through this and ask some of these questions, these are all questions designed to expose a potential, deduction and tax accuracy. It also serves as checks and balances. You might look at some of these things and say, well, I don't even know what that is. Well, that's okay. Probably it's not something that is pertinent to you. But it's just designed to be a very comprehensive process to make sure that the tax return is done accurate and we're not overlooking anything. So you can skip it many times, but like I said, time well spent. We don't want to pay any more taxes than necessary. We don't want to have any errors, because anytime you got errors, then the time to get them corrected or whatever can be lengthy and annoying. So taking the time to fill this out is highly encouraged. So let me give you an example of like the checks and balances side of it. So let's suppose you submit all your tax documents, you get your, your 1099s and W-2s and things like that, and you contributed $5,000 to an IRA for the year. And there's no specific form for that you would have a tax season. But let's say if it's asking you if you contribute to an IRA and they catch it because you didn't tell the tax preparer that you contributed to an IRA and you forgot all about it, or you did a Roth conversion or something like that. This is designed to do that so that in the event that you are overlooking, any type of communication or documents, that is caught. So again, it's like I said, can take some extra time, but I think it's it's very well worth the time. Okay, so Other thing I'd like to talk about, get my document back here. Is tax preparation versus tax planning. So many of you would like to think that the tax preparer, whoever it might be, is looking out for you as far as finding tax deductions and maybe giving you tax planning. And unfortunately, rarely is that the case. I'm not saying never, but within the industry, within the professional field of tax preparation, the term that they would use is they are focusing on tax compliance. And what does tax compliance mean? Tax compliance means we are doing everything we can to make sure that we're getting all the numbers on the right line. So it's all about accuracy and not so much about planning. And so it says here, look at the life of the tax preparer this season. So think about it. So a tax preparer has a limited time period, right? So with the exception of the last couple of years, it's April 15th. So we got all of these returns for everybody in the country needs to get done. So what they're looking to do is they want to get all of your documents in the door. They want to get them scanned into their system. They want to review it, make sure they get all the numbers on the right lines, get the return assembled, get it paid for, and out the door, right? Because they don't have time. So it's busy. So they're the time of that year, they're not thinking, okay, wonder what we can do to help John and Mary maybe, save some more taxes, right? Well, for one, you're not paying them for tax preparation. You're paying for tax planning. You're paying for tax preparation. Now they might say, yeah, you can do an IRA or something like that, but that's not really true tax planning. So tax preparers are focused on the accuracy in getting things done, and they've got a very limited time to do that. So if you really want tax planning, there's a couple of things you need to think about. For one is the time. So getting time to actually focus on okay, strategically, what could you do differently going forward? Because when there's very few things that you can do during tax season, because the actual tax year is already over, right? So here we're in in 2022, and we're actually doing the taxes for things that happened in 2021. So there's not a lot of things that can be done, presently. So they don't have the time to do it because of the kind of time constraints. Another thing is cost. So you're paying for tax preparation. You're not paying for tax planning. It's a totally different mindset. It's a totally different it's a mindset, I guess, is the best way to describe it. And thirdly, I criticize a lot of people in the tax preparation field is that they're not proactive. And sometimes it's downright cowardly, and I say that. And my analogy is that a lot of tax preparers are great going out onto the battlefield after the battle's over and counting the dead, but very few of them take the time or the initiative to help prevent casualties. And we would all love to, prevent casualties. Casualties meaning, our dollars that are going to taxes. So how do you go about getting tax planning? Well, for one, you have to ask for it in most cases. Do you do tax planning? And a lot of them will flat out tell you, no, we just do preparation, or we're not really, we don't really cater to that, which would be important for you to know. Secondly, it would be important to schedule out of tax season. So after tax season's over and all the all the craziness and the chaos is done, and they've got some actual time to think about it and sit down and talk to you about it. And thirdly, whoever you're working with, pay them for tax planning. You're paying for tax preparation. You're not paying for tax planning, which is, like I said, a totally different mindset. So and how we approach it is very different, because really the absolute best case scenario is when your advisors are working together, whether, that's, your financial advisor and your attorney for estate planning, or financial advisor and your CPA or your tax preparer. When they work together, you're going to get the best possible outcome. But in many cases, and unfortunately in the industry with, egos between different professions, there's not a lot that try to even work together or want to work together. And it's something that I've, I've had some different variations of how we've tried to, merge these services and have advisors, working together. And right now I think we got, a pretty good system, but it does make a difference when they're working together. And the thing that I think really shocked me the most as I really got involved, I've been a financial advisor, for over 30 years and had some tax preparation solutions for over a decade. But until I really got into the delivery and the actual preparation process, I was stunned to find out how many things fall through the cracks and you never know it, simply because there's no if there's no communication. If your tax, or if your financial advisor never has to look at your tax return, they're doing you a disservice. There might be things that you can do, such as tax lot harvesting, or distributions from your investment accounts, coordinating with your retirement plan distributions, and tax efficiency, location of different assets and the different types of accounts. And if they're not even looking at your tax return, you're not getting any tax planning. Sure, they might tell you how something is treated tax-wise, but they don't really understand your situation. And like I said, it's amazing how many things fall through the cracks. So let's take a quick example of some tax planning that is really kind of easy, that you probably don't even hear about. So here is a Schedule A. Actually, let me bring over 1040. All right. So here we have a 1040. List all of your income sources. And so let's take a retired person. They're getting some Social Security and they're taking some IRA distributions. All right, so that adds up. They determine what their gross adjusted gross income is. And then let's say you contribute, I'll set screen again. So say down here, you had some interest paid, you got taxes paid, some medical expenses, you got some gifts to charity down here. And let's say you're married filing jointly and your standard deduction is $24,000. If all of these items on Schedule A only add up to $15,000, these gifts to charity, these medical expenses don't even matter, right? Because you take the standard deduction. But let's suppose that you've got $3,000 in gifts to charity. And now, instead, I'm trying to get this off of here. Sorry, having a navigation issue here. Now, instead, let's say you had $20,000 in IRA distributions. And you had, like I said, $3,000 in charitable contributions, and you couldn't deduct it because you took the itemized deduction. We can get it above that line. And so let's say we tell you to directly take part of your required distribution for your IRA, say like take $3,000 and pay it to the charity that way. Now your net distribution is only $17,000. You satisfied the required minimum distribution, but we got you above the standard deduction line, and you got to give that money to charity and actually get credit for that tax deduction. and then you still get your full standard deduction. So I don't know how many of you followed it at that, but it's really simple. It's something that, you know, we as a financial advisor, taking care of your distributions can do for you. Let the tax preparer know that part of your required distribution went directly to charity. You never received it. So you get credit for it up here, and you would never get credit for it under the standard deduction. So simple tax planning, but trying to go through that with somebody at tax season, you know, is time consuming, and it really needed to be done ahead of time. So many times simple planning strategies like that are never exposed. So that's an example of some tax planning. And one thing that also is different in our service is the fact that we have a separate tax planning department. It's not our CPAs that provide the tax advice. So even during tax season, after your return is done, we send it to the tax planning department. They review it. They give me a report back on what they've identified, and then I go over it with our clients. So that's really what kind of makes you know, makes us different, and I think better. And not I think I know it's definitely better than what most of you are getting, because again, advisors aren't working together. So let's take a little bit of a discussion about who's preparing your taxes. Think about that. So one could be you're doing them yourself, and certainly there are certainly people that that's the right solution. You know, if you're doing a 1040 easy or whatever, then you know, you probably don't really need any tax planning, tax advice, and you know, you can save the money. But you know, for many of us, you know, our tax bill might be our top 1, 2, or 3 expenses that we have out of pocket. So if you're trying to save a couple $100 or whatever, doing it yourself, I don't think that's a, you know, that's a good use of your money. You know, you don't know what you don't know. And I've always been surprised that, you know, phone calls that I would get from clients, you know, asking me certain tax advice, and I'm not, you know, preparing their tax return. And I'm like, well, why are you doing your return if you don't already know the answer to that? You know, you shouldn't be doing that. So just be aware, you know, paying the extra money to an expert and a system that's designed to help you with the tax planning might be well worth it. Secondly, would be the franchises like the H&R Block or Liberty. And so some of these people are surprised to think that, you know, okay, these are real tax experts. And a lot of that is because it's what they try to tell you in their ads. And I point out to people, if you look at their financials, actually, a lot of what their objective is yes, they do tax returns, they get money for the tax returns, but they, a big income source is they like to push the loans, the refund advance loans, and they get a really high interest rate on that, trying to get people to like, that's why they focus so much on the early part of the tax season, because the people that are really hurting financially and need the refunds, you know, they do the refund advance and they charge high interest rates. They get a ton of interest income for that. They also like to sell insurance, like audit insurance, which is for the most part a waste of money. A good, you know, tax firm, if they make a mistake on your return, needs to be corrected, they're going to take care of it. And you don't need insurance for that. And if you committed tax fraud, insurance isn't going to do you any good at all. Tax fraud is a, you know, is a crime. And so audit insurance doesn't help you towards that. But that's some of their main objectives. It's not tax reduction. Again, it's selling these other ancillary products. Thirdly would be a CPA firm. And you know, CPA firm, you know, that's their main bread and butter. They get, you know, they get paid for making the you know, making the tax season you know, a profitable one for them. And then there's us, Wisdom Tax Group, and you know, we have a significant number of CPAs and enrolled agents. We have contracted. attractive, pricing. And really my motivation for establishing Wisdom Tax Group was that, when you're a financial planner and you're advising, it helps us to help people through that tax season. It helps, really solidify our relationship. So if we're able to take care of your planning, your investing, and the tax advice, and we also do the estate planning as well in-house, then, hopefully we're going to have a client for life, which is really what our objective is. Going digital. So one question we also tend to get is, how long should we keep our tax documents? We hear 3 years, 7 years, 10 years. And the answer is depends. So if you go to the IRS website, there's a section in there that tells you, based on what the situation is, how long you're supposed to keep those tax documents. But most things would fall under anywhere from 3 to 7 years. If you've committed tax fraud, they can go back forever. So they found fraud, a couple of years ago, they can keep going back until, everything looks legit. So we need to keep that, forever. But why do people wonder how long to keep the documents? Well, plain and simple. They don't want the clutter. They don't want the, stuff in their filing cabinet or, wherever they might keep it. So they like to get rid of it. Well, the best way to take care of that, in my opinion, is to go digital. And quite frankly, it's been a transition that's been going on for years. The business world doesn't really want paper anymore. And so if you take the time to learn how to scan, if it's something you've never done before, it can be a little, intimidating, I guess. But the reality is scanners can be pretty cheap. You can, easily learn to scan. Probably have somebody, family member. I'm actually talking to one of our tech people to see if we can, if they can offer like some classes or something like that, and an equipment recommendation, so that you can keep those documents. But you can keep, titles, deeds, medical records, all types of things. And when you have it on a computer, and a backup on a hard drive or whatever, it doesn't take up all the space. And then you don't really have this concern. And it's always easy to locate those documents. So I'd highly encourage, going digital. It's really the way to go going forward. And then you don't really have these concerns because, you're able to always put your finger on those documents and you don't have to worry about purging them or getting rid of them. And the last thing I would want to talk about is avoiding tax fraud. So one thing I can tell you is you're just never going to get a random call from the IRS. They don't do phone calls, they do mail and regular mail. That's how they're going to mostly communicate with you. Any type of a lot of people have already heard about these phone calls and, threatening to send a warrant out for you if you don't respond in a certain period of time. Those are all scams. You also don't receive random emails. But those are two popular ways that people try to reach out and intimidate people. And so, just ignore them. Another one is the unemployment benefits. And that was kind of an issue that came about due to COVID, because they were getting somebody's identity and then they were trying to file unemployment benefits. And so you could get a government form that suggests that you received some unemployment benefits. And if you didn't, then I would seek out a licensed or an enrolled agent or a licensed CPA, that has some experience dealing with some of that stuff to help you, get out of it. Another one is ghost returns, where you get somebody that says, hey, we can get you a really big return. We'll prepare the return. And the reason they call it a ghost is because they don't sign the return. They just say, hey, we'll prepare it for you, and you sign it and send it in. And they've basically taken information from you by preparing the return or getting copies of your documents. And another popular one is, you can look this up on the IRS website. It's called the Taxpayer Advocacy Panel, or TAP. And it sounds like it's an organization that's for taxpayers and help you out. And it's a fraud scheme. So just be very careful where you share that information. If you get something like that, reach out to somebody in the industry, or talk to a CPA firm that you can go in and talk to them face to face if necessary. But these are just a couple of the key things that I wanted to share with you on avoiding tax fraud. So that brings us to the end of the webinar. Hopefully you got some important information that you can use as it relates to tax season. And if we can help out in any way, please reach out to us at Wisdom Tax Group. Got our phone number and our office number here, or Lucas Financial Services at 614-840-9770. Thank you very much and have a great day.